You think you're bad with money. You've probably thought it for years. Every time a letter from HMRC lands on the mat, every time someone says the words self-assessment and your stomach drops, every time you open a banking app, see the number and quietly close it again. But the real story is stranger than that. Because the feeling you carry around, that quiet shame, that sense that everyone else gets this and you somehow miss the lesson, isn't a flaw in you. It's a feature of the system. The confusion is the point. Let me show you what I mean. Imagine you bought a little crypto a few years ago, maybe in 2021, when it felt like everyone was. You put in a few £100, it went up, you got excited, you sold some, moved some into a different coin, spent a bit on something silly. Then the market turned, you lost interest, and you forgot the whole thing ever happened. Here's what nobody told you at the time. In the eyes of HMRC, you didn't just mess around with crypto. You made what they call disposals, and every single one of those disposals was a taxable event. Selling crypto for pounds, a disposal. Swapping one coin for another, also a disposal, even though no real money ever hit your bank. Spending crypto on goods, a disposal too. You didn't feel like you were doing anything official. You were just clicking buttons in an app. But the tax system was watching every click as a moment that might owe it something. Now, does that mean you owe money? Maybe not. And this is the part that matters. There's a thing called the capital gains tax annual exempt amount. It's the slice of profit you're allowed to make each year before any tax is due. And for the 2024 to 2025 tax year, that amount is £3,000. So if your total gains across the year came in under that, you may owe nothing at all. But hold on, notice something. A few years ago, that same allowance was £12,300. Then it was cut to £6,000, then to £3,000. The goalpost didn't just move. They moved towards you quietly, year after year, while most people had no idea it was happening. That's not a conspiracy. It's just how the system breathes. It changes in the background, in budget statements most people never watch, in numbers buried in documents nobody reads. And then one day, the rule that used to protect you simply doesn't anymore. Nobody calls to warn you. The shame is yours to carry, but the change was never yours to see. So let's slow this right down. Let's actually decode it the way it should have been explained the first time. Capital gains tax. Strip away the official tone, and it's simple. It's a tax on profit, specifically the profit you make when you sell something for more than you paid for it. A house that isn't your main home, shares. And yes, crypto, you're not taxed on the money you put in. You're taxed on the gain, the difference between what you bought it for and what you sold it for. Sounds easy. Here's where it gets slippery. To work out that gain, you need to know your cost. What did you actually pay? And if you bought the same coin at 5 different times, at 5 different prices, which price counts when you sell? Most people assume you just match the sale to the purchase. You don't. HMRC uses something called pooling. All your purchases of one coin get blended together into an average cost. And that average is what your sale is measured against. There are special rules layered on top, like the same-day rule and the 30-day rule, designed to stop people gaming the system. Read that back. Did any of it feel intuitive? Of course not. And that's the whole point I'm making. None of this is hard because you're not clever enough. It's hard because it was never designed to be understood by you. It was designed by specialists, for specialists, and you were quietly expected to either become one overnight or pay someone who already is. Let me give you a name to hang this on. Dan Neidl, a former tax lawyer who now runs a non-profit called Tax Policy Associates, has spent years pointing out just how baffling the UK tax system has become, even for the people who built careers inside it. When the experts themselves describe the rules as a maze, what chance were you ever given? So no, you're not bad with money. You were handed a system that confuses professionals and then made to feel stupid for being confused by it. Now, let's talk about the fear, because underneath all of this, there's usually one quiet question. What happens if I just ignore it? Here's the honest answer. Ignoring it used to feel safe because it felt invisible. It isn't invisible anymore. HMRC already receives data from UK and international crypto exchanges. They have for a while. And it's about to go further. Under a new international agreement called the Crypto Asset Reporting Framework, exchanges will be reporting account holder information automatically across borders, with data sharing building through 2026 and the years after. The age of they'll never know is ending, not with a dramatic crackdown, but with a quiet flow of information that was always going to arrive eventually. In recent years, HMRC has also been sending what people call nudge letters. Not accusations, not fines, just a polite note saying, in effect, we think you may have crypto. Please check whether you have tax to pay. They're gentle, but they're also a signal. The system is no longer guessing in the dark. So what actually happens if you do nothing? It's rarely a dramatic knock at the door. It's slower than that, and in a way that's worse. Interest accrues on tax you didn't pay. Penalties stack on top, and they're often larger when HMRC finds you than when you come forward yourself. A small, manageable thing from 3 years ago grows quietly into a bigger, heavier thing. Not because you were a criminal, just because you looked away and the clock kept ticking while you did. But here's the reframe. The thing nobody puts on the scary headlines. Sorting this out is almost always smaller than the dread of it. The dread is enormous. The actual task is usually not. Most people who finally sit down and face their crypto tax discover one of two things. Either their gains were under the allowance and they owe nothing, and all those years of stomach-dropping anxiety were about a bill that was never going to exist, or they do owe something and it's a number they can handle, far smaller than the monster they'd built in their head. The anxiety was never really about the money. It was about the not knowing, the fog, the sense that there was a right way to do this that everyone else understood and you didn't. So let's lift the fog. Here's the calm version of what you actually need. You need a record of every disposal, every sale, every swap, every time you spent it. You need to know roughly what you paid and what you got. You need to apply the pooling rules to find your gain. You need to compare that gain to the allowance for the year. And if there's tax to pay, you report it through self-assessment with the online deadline falling on the 31st of January after the tax year ends. The UK tax year, by the way, runs from the 6th of April to the 5th of April the following year. Another small, strange rule nobody ever explained that you were just expected to know. That's it. That's the whole shape of it. It feels like a wall. It's actually a checklist. And a checklist is something you can be handed. You don't have to build the system from scratch in a panic at 11 at night in January. This is exactly why the JR Former Crypto UK Tax Tracker exists. It's a simple, ready-made spreadsheet built around these UK rules, so you log your disposals in plain language, and it does the pooling and the gain calculation for you, keeping you HMRC ready without needing to become a tax specialist yourself. The fog becomes a form you fill in, the monster becomes a number you can see. That's the real shift here, not from broke to rich, not from careless to perfect, just from not knowing to knowing, from looking away to looking at it calmly once with the right tool in front of you. Because the truth is, the people who feel good with money usually aren't smarter than you. They're not more disciplined. They just stopped trying to hold the whole maze in their head and started using something to hold it for them. They outsourced the confusion. That's the only difference. That's the entire secret. So the next time that letter lands or that word gets said or the app gets opened and closed in a hurry, I want you to remember what's actually going on. The drop in your stomach isn't proof that you're bad with money. It's proof that you were handed something deliberately confusing and then left alone with it. You were never bad with money. The system was just built to make you feel that way. And the moment you stop carrying that feeling as a personal failing and start treating it as a problem with a tool-shaped solution, the whole thing gets quietly, almost disappointingly, simple. You thought you were bad with money. You were just the only one in the room who never got the instructions.